I've done the IY to the points multiplier. I built a little tool for that, so it's super easy. You just like go and take the RUSD from Pendle, put in the whatever points multiplier it is, and then it tells you sort of like what a 1x point multiplier gets you, and then extrapolates an FDV from that. I think this is a low estimate because this is assuming effectively a $20 million FDV. To me, that feels low. For two reasons. Welcome to another episode of the Dojo Pod. We've been out for a few weeks. There's been sickness. There's been that. Really, that was it. So, but now we're back and happy to have you guys watching and joining. And look, we got a new person. He's joining us today. This is Vlad, also known as, do I dox your
Dox away.
Okay. Also known as Pixel
already.
on Twitter. He's had a bunch of big Twitter accounts, but then they've got destroyed by the Twitter lords. And so anyways, he's of Tao Labs. You've probably seen him, especially if you're following what's going on over at IPOR. They are the curators for some of the biggest vaults over there. So like the big leveraged reservoir vaults. By the way, we should talk about reservoir because they're real close to 20 billion points. And I've done a little bit of point speculation I think could be interesting. But Vlad, why don't you introduce yourself and tell us a little bit about like your current place in the space?
Sure. So to complete the doxing, my Discord and Twitter handle are Pixel or variations of Pixel.
Last name and address, please.
I don't live in one place, but I'll do all of them for you.
Yeah.
I've known Steven for way too many years already. 4, I think. That's a long time to know Steven, honestly.
That's true. Yeah.
Not doing wonders for mental health.
Thank you.
I say that in the most complimentary way. Listening to DeFi and doing math while listening to your vids, man. 4 years of that, I founded Tao Labs a year and a half ago. It started off as a tokenomics shop. It grew up quite fast last year as Bitcoin was growing, as the market was getting better and more people wanted to, launch protocols. We focused on just doing, tokenomics, writing white papers, doing models for mostly DeFi projects. Half to 2/3 of the projects we always worked with were DeFi. And the rest were a variation of, GameFi, GambleFi, infra, data, all sorts of other degenerate stuff. And more recently, as of not even a month ago, we got into vault curation. It was a very organic move for us. And we are now very aggressively starting to do new strategies. As Steven said, we're quite close to IPOR. We are close, we're quite well entrenched in the Flow blockchain ecosystem, where we're going to have stuff launch in the next 2 to 3 weeks, hopefully. And that's kind of the short of it. And yes, Flow blockchain is doing DeFi. They are very aggressively pushing for DeFi, actually.
Well, I know nothing about Flow, so I'd love to learn about that. But before we get into that, can we just talk a little bit about IPOR and the vaults you guys have live? IPOR's been around for a while. I think that they're like quite a respected team in terms of like, having good technical chops and stuff like that. But, they did have a bit of a struggle kind of like early on gaining traction, right? I'm just kind of
they failed to maintain all that rate swapping. They like look at you. Okay,
that's me. Yeah, they had a bit of a slow start. Liquidity mining, boom, things went parabolic, and it's kind of been just like downward since then. I mean, since they started launching this new round of vaults, it looks like things are kind of like going up. But I am just curious. I mean, TVL is obviously not a great metric, when assessing like the quality of a protocol, but for outsiders who don't have a, kind of deep perspective on things, it is one metric that people tend to look at. So I'm kind of curious to hear, as a curation team, why do you guys choose them? Why do you guys like them? What's the cool stuff that's going on over at IPOR?
Sure. So they are much newer in the vault curation space than you would think. One day, maybe it would be great for you guys to have Darren or Lucas or Dimitar from IPOR here. Their Genesis story is very, very, very cool. Me and Darren became quite good friends since we started working together. Also, this is me doing BD for IPOR, so I hope Darren will appreciate it. They did a rebranding towards Fusion because their main focus is going to be vaults. It has been announced they voted on it in governance, and it's going to be the complete remarket is going to happen soon, I think. The vault side are relatively new, started off a couple of months ago. We started talking because at the same time we were going into vault curation and they were going into like supporting vaults. So they were looking for curators. Goes back to the thesis that I have that we talked about, which I am happy to go over now. Whereas I say that there are not enough curators for the demand in the space. And you guys have heard a theory that is the opposite. TVL wise, I mean, it is a struggle in general. to get LPs. It's not generally the easiest thing to do, telling other people to allocate money where you are doing stuff. For IPOR, I know they have a bunch of other deals and a bunch of other partnerships that are going to bring in even more capital in the next time. Yeah, in the next couple of weeks and months. As for Tao, we only started curation like a month ago. So you're going to see our TVLs all over the place. The vast majority of it is like organic, or it comes from the dojo, or it comes a bit from us. We don't really have any finalized LP deals yet. The reality of DeFi is that, and I think this goes also outside of crypto in general, it's a self-fulfilling prophecy, whereas people trust protocols or curators or stuff that has a big number associated to it.
Yeah, you get that Lindy, man.
Exactly. And when you're new, you have to, you have to push your elbows a bit to get your TVL up, and then it just starts going much easier as it grows.
So let me ask you something. You guys started with IPOR, which is as a curator, that's a wild card. Like IPOR had just rebranded. They had just started their sort of like vault curation. They don't even use the word curator. They use Atomist, which is, one, it's a cool name, but two, it's so left field. I think you guys were one of the first Atomists on there. You launched with your reservoir points maxing, which is kind of cool. It's like you get 15% APR plus just a ridiculous amount of points. That's neat. I'm also like reservoir maxing right now. Speaking of which, reservoir 8.5% APY. I don't know. That was like totally out of left field. I was checking their APYs yesterday, which is like 8.14 APR. Love to see that. I think it's because of all the focus they've been doing on RUSD, which gives a leverage exposure to the APY for SRUSD, but who knows? Anyways, you guys went with IPOR, which to me is like not the obvious first choice. For me, the obvious first choice would have been like Morpho, where like a lot of the curators are getting their chops, or an Euler, where a lot of the newer curators are testing things out. And that's just like managing lending markets, right? And working with protocols. Why did you guys decide to go with an actual on-chain strategy on IPOR rather than just like the run-of-the-mill lending operating?
The decision was quite strategic, and at the same time it happened, we just started talking with IPOR at around the same time. When you're a new curator, you have to be more creative. You have to make a name for yourself in other ways than by just having a massive amount of TVL somewhere. Right. And being on the same platform as Gauntlet, as RE7, Mev, Steakhouse, and all the others doesn't really do that much for exposure. Whereas if you go with a newer protocol, and especially since we know the team, so there is an amount of trust. And as you said earlier, IPOR have been around for a while. They have a pretty good reputation in the space. We just thought it would be better to try and rise at the same time with them, and both grow at the same time, basically. As for the technical reasoning, because there is one, the guys have spent quite a long time working on the infrastructure and the architecture to deploy vaults and to be able to connect with other protocols and assets. And I'm not sure how much or how little of this you've heard before, but curating a strategy, even a simple one, is quite a decent tech lift. And most protocols kind of give you the UI and you're kind of left by yourself. Whereas IPOR, they've been quite supportive in helping us do, set up the...
Shout out to Darren and the team. So, I mean, this is kind of like some secret alpha. I love Contango. Everyone knows that. But you guys are doing what Contango's doing for like a fraction of the fees. And I think this is like not insignificant. So you can leverage like SRUSD up on Contango automatically, but you're paying 5 bips, 5 bips times notional. So what that really means is 0.05% times your leverage, just in case like it's confusing to you. So if you're 10x leverage, that's 0.5% to enter and then 0.5% to exit, which it's not on the amount you're borrowing. It's literally on your full position. So it's on your total notional value. So 0.5 to enter, 0.5 to exit, that's 1% a fee. And if you're getting 15% APR, that's a whole month of yield almost, which can be pretty rough. So can you explain how your fees are a little bit different? And by the way, this is not like a sponsored podcast by Tao. We just like the guys and think this is cool.
It's the benefit of knowing you for
4 years. Yeah.
Yes. So yeah, outside of the 5 bip difference, which you already explained, makes quite a difference. We also, from our end, we take no performance fees. We will have taken no performance fee for this vault at all. The only performance fee is 2%, and that is for the IPOR DAO, basically. Our priority is to grow TVL.
Now, is that a performance fee or a management fee? Like, is it okay? So it's on the actual performance. So
the actual
2% of 15%, which is 30 bips.
Yeah. And yeah, on the 15% on the USD, not accounting for the airdrop.
Right. It's not 30 bips times leverage. It's 30 bips of that 15%.
Yes. The main reason that we set up this vault is that it's, at least currently, and since you mentioned it before, the SRUSD points are almost at 20 billion. We made it so that it's the best place to get reservoir points per your deposited USD. The reason why we also set it up was that, assuming a certain minimum FDV of the airdrop launch, this vault should offer you like the highest exposure to the airdrop. You would farm it in the most optimal way here. If the FDV of reservoir is, and I'm trying to remember exactly the number, but anything under, I think, 8 or 10 million FDV, which would be quite bad for reservoir, I think that's where you would have been better off depositing in the loop that reservoir themselves set up on IPOR instead of our own. Anything above that 8 to 10 million FDV for when reservoir launches, you are better off to farm points having been in the
Okay, well, let's actually. Oh, Mara,
I was going to say, ask something. There's so many of these stablecoin protocols, and it's so hard to understand what a future FDV of the token might be, right? I was just curious to hear from both of you guys, like, how you think like we can kind of estimate these things, right? I mean, there's certain mathematical ways, as I'm sure Steven's going to go to, in terms of looking at, like, Pendle, what's the IYs, what is the market assuming? And I think that's actually maybe one of the best ways of doing it. But, in crypto, everything tends to be kind of like a comparative analysis. Oh, this is a Athena-like product. Maybe it should be some proportion of Athena. Or this thing has X amount of TVL. It should be some multiple of that amount of TVL. Do those make sense? Like, are those real ways of, like, kind of trying to price these assets as a multiple of their TVL or as a percentage comparative analysis against, Athena? We have some kind of, hopefully, major airdrops and TGEs on the horizon, right? Resolve should be happening very soon, I think, right? Like in the next couple of weeks. Reservoir, as you guys have said, getting close to 20 billion. Level, I think, is heading towards a TG as well. There's a bunch of other ones, right? What do you guys think about that generally? How should we be thinking about the potential FDVs of these tokens when they launch?
Yeah, the answer is it depends. You covered it a bit well. The math we do internally to try and estimate these, I'm sure, isn't vastly different from yours. Specifically for reservoir, we assumed a certain percentage of the airdrop, or like at least a range, and we assumed an FDV. This is to try and find out the value per point. But then again, you can really take into consideration, and this is what the tokenomics side of Tao and our expertise comes in. Macro matters a lot, and I'm talking here about crypto macro. If you launch in bad market conditions, very high chances your launch isn't going to really go well. The reality is that there's just not enough interest, and when you're aiming for an FDV of 30 million at launch or 50 million or above, there's just simply not enough liquidity in the market to mirror that. The launch might be, I mean, even with a good tokenomic model, even with great fundamentals, it might just not go anywhere. The market is in a good place now. I think, and I've said this in the past month, people have been way too bearish about a month ago. I'm starting to get the feeling that people are going to start to be a bit too bullish now. As for the reservoir FDV, outside of just calculating it based on an FDV and amount of points, we can't really aim it too much. We did have some internal model that we played around with when we had the restaking narrative, whereas we tried to be a bit more. We tried to find a general formula for points, because restaking was approximately similar in how they were giving points. But we got into the same problem as here. You can't really make a model that is general for all of them.
Steven, I see you clanking around on a bunch of spreadsheets and pendulum stuff.
Even.
Yeah.
It's not aggressive. It's just a very loud keyboard. Actually, it's aggressive. I always step aggressively. You have to. This is a DeFi. If you're not aggressive, you're losing. We should actually, tangentially, I do want to talk about that, which is like, I don't think you can be unhealthy in DeFi. I feel like you have to maintain some level of physical fitness, because it's just so much work to stay on top of things in DeFi that if you don't have the energy reserves to do that, look at that, look at those guns, then you're just not going to be able to keep up. And we've also noticed like people in DeFi, so we have a fitness section in the DeFi dojo. We have a personal gym in the dojo. You go in there, you can work out. No, and like people are all doing all these crazy regimens with like creatine and fish oils and all sorts of stuff. And I think there's something to that. Like literally you have to be physically fit to stay mentally fit enough to be able to, and maybe you don't have to be. I mean, there are some edge cases. I'm sure you've seen people who like don't fit that mold, but whenever I go to conferences, I'm always amazed by how physically fit people are. So let's talk about Reservoir and then loop back to that. I was saying I've done the IY to the points multiplier. I built a little tool for that. So it's super easy. You just like go and take the RUSD from Pendle, put in the whatever points multiplier it is, and then it tells you sort of like what a 1x point multiplier gets you, and then extrapolates an FDV from that. I think this is a low estimate because this is assuming effectively a $20 million FDV. To me, that feels low for two reasons. One, I think they raised at a higher valuation. I'm almost positive they did. And two, they're a $230 million protocol. So Athena, of course, launched at a 2x, I think, or a 5x multiplier versus their TVL. Of course, it was like airdrop, bonanza. It was the max hype of the beginning of the bull market. And so they had all that going for them. They had a lot of institutional buy-in. They had, what's his face? Hayes. I was doing this because he's got a lot of teeth. He always looks like he's a shark. But then we had like Resolve, who is very similar to Athena. And they're probably going to launch at a roughly 1-to-1, according to most estimates, according to like where the points are on Pendle. So like they're at a 200 and no, oh my gosh, look at that. So they've blown up with the market going up. They're at 413 million TVL. Good for them, by the way. That's amazing. So maybe not like 1-to-1. We're estimating they launched somewhere around like 250, 300, maybe 150 to the 300 range. 400 being like, more bearish, but we're getting into more bullish territory. So that's really high. For Reservoir to be so disproportionately low seems weird to me, but they haven't released any tokenomics. I think that's like the one thing that's throwing people off. Go ahead.
I was also going to say, like they put this line in the sand at 20 billion and we're getting real close, and I think
we are getting real close to that 20 billion.
Maybe the market is pricing in some sort of kind of funny business. I don't know. I like the Resolve team. I'm not throwing any shade because they haven't done anything yet, but like they did kind of Reservoir. I like both teams. I like both Resolve and Reservoir. But the Resolve put a kind of a line in the sand and they said 20 billion. And it's going to be a little bit of a tough pill for people to swallow, I think, if they start walking that back. So I'm very curious to see how this kind of plays. I mean, I have seen how a lot of TGs work. I'm very sympathetic to teams in terms of like, it is so hard to predict. You have so many externalities, there's exchanges, there's
that kills so many TGs.
It's so complicated. But the problem is that people, when they set an expectation, when they have to inevitably walk it back, it always is just very painful. So maybe the market's partially pricing that in. Maybe also it's like kind of the dilution effect, right? Like I think there's two factors. One, there's so many of these things, so many stablecoin protocols. There's certainly a dilutive nature, I think. There's Daddy, Athena, and then there's a bunch of kind of not copycats because they're all doing different stuff, but there are like a bunch of other new gen stablecoin protocols. And then I think the other thing is we really need to see how these protocols are able to maintain TVL post airdrop.
Just look at this.
Right?
This is nuts. I mean, Pendle, amazing. I love him so much. USDF. I forget. This is this is Asterisk. So you have Asterisk, you have Open Eden, you have Level, you have Midas, you have Falcon, you have which one is YUSD? YieldFi, right? You have YieldFi. Honestly, there's so many others I don't know. Noon Capital. Genuinely didn't even know about that one. You have like the Rings protocol. You have Staked USDF. You have SDF. There's so many stablecoins. It's obscene. And so many of them are like in the season 1 points phase. Now, I happen to have fallen into the Reservoir bucket and I sort of like bought into the narrative. I think it's really cool. I like it. And so I've been talking about them for a long time. So maybe I have like confirmation bias. Also, not confirmation bias, availability heuristic bias, and there's another one, which is
confirmation
bias.
Because you look at it all the time. It's also
exactly right. Bias. Yeah. So I think that people are looking at it too.
Well, my point is, Stephen, like all of these, there's so much competition for stablecoins, and there's so many season 1s of stablecoins happening right now, which is a great time to build your TVL. I think the telling thing the telling piece is going to be when we see who can maintain the TVL. Now, I think systems like Reservoir and Resolve, actually, since we've been talking about both of those, probably stand a pretty good chance because there is actually interesting things going on underneath the hood. Whereas some of these other ones, I'm not going to point any fingers, are just kind of like USDC wrappers or like, you know, RWA wrappers. And I'm a little bit less. I think there might be some very big winners in that kind of category, but I think that it's going to be, you know, more staggered to the top. Whereas I think people that are doing interesting DeFi stuff, there's probably going to be more winners out there just because there's kind of more of a demand for higher yield stuff. So I don't know. We'll see. We'll see how all this plays out. I think we'll get a good, you know, like shake up in this stablecoin space. I think if Resolve honestly has a really good launch, it probably ends up pricing Reservoir and many of these other kind of things higher. I think if it has a poor launch, then they start getting priced lower because there's like more data points that we can look at. So I don't know. It's an interesting time in the new gen stablecoin landscape.
There's an interesting point I wanted to point out here. I've been doing conferences for the past month to push for valuation generally. Yeah, it is. It is indeed not for the faint-hearted. There are most DeFi events. There are just people wanting to launch stable coins, and also the hottest thing in general is RWAs. And you know, it's maybe the top of maybe a top signal when you have random funds from Switzerland that talk to you that they want to launch their own stable coin when they have an AUM of, I don't know, even 20 million if. That's why RWAs got so big, because people realized exactly what Mar was talking about. Gathering TVL pre-launch for season 1 is one thing. Actually making that liquidity sticky is a completely different story. And there is a much bigger trend now of people wanting to bring in yield from IRL businesses and make that a bit more efficient in DeFi. So you make, I don't know, you have...
we've seen some failures there.
Yeah.
We've seen I mean, the path to glory is littered with a bunch of failed RWA products that have tried to tokenize the untokenizable, or not even the untokenizable, but, I think like the success fail case is Usual. So Usual tokenized a 4-year bond. And then everyone was like, oh, this is great. It's a stable coin. And then it depegged because it's a 4-year bond. It's not 1-to-1 until maturity. It's like, the discount and then 5% annualized APR until maturity, or 4, whatever it was. That's like the best case scenario for some of these things. We saw, and I like these guys. I forget what their name was. Starts with an A. We talked about them a long time ago. What was it?
Anzen,
yeah. I like Anzen. They did CDOs, no, not CDOs, credit something. Credit notes. So credit notes. So like basically loans to businesses that have some expiry, and they just could not for the life of them maintain their peg because these things are not highly liquid. They're just not. They're like illiquid things that are getting a yield, and they didn't have enough in the reserves, and they didn't have a decent peg keeper. And minting and redeeming, I think, was all institutional, and there was a lack or slowness there. Then we've seen real estate come on chain. I have not seen a single one of those work out. So like hopefully one of those does. So
an interesting RWA that like people are trying to tokenize is gold, and I've learned something very interesting.
Tax G, man.
No, yeah, but actual gold mining, and I will explain this in a very bad way because it was explained to me by
you went to Dubai.
Environment. No, this was even before Dubai.
Okay,
people did try to shill me gold RWAs in Dubai. I mean, of course, and oil. The way you mine gold is actually when you find a new area that you prospect, you start digging and you find a certain amount of gold per, I don't know, cubic meter or something.
Sure.
And you basically price the plot of land based on the initial digging that you do. Effectively, the gold there, and this is kind of how it works, is sold on what looks like a futures market, and the actual gold that is taken out and sold physically will be done 5 years later, or like 3 to 5 years later, but the actual money for it is paid today. Like the whole gold market is very, very, very unique. Real estate cannot really work not as we think, because you need size. You need actual big size, and you need constant occupancy for rents.
Right.
If you want to bring that on chain. So you would need to have, I don't know, thousands of massive apartment buildings. It is
real estate works better if it's already a huge real estate mogul who then tokenizes the rights to their profit or something. But why would you do that? Versus if you're trying to onboard a new real estate company with tokenized dollars against real estate, that has not worked. What I wanted to point out is, there are a few things I want to point out. One is Mara, you're right. Like Resolve and Reservoir have compelling organic yields, and I'll kind of admit something. I have never been that interested in Resolve points. Not because the points aren't good, not because the points aren't interesting, not because the airdrop's not going to be fascinating, but because I was just more interested in like leveraging up an 8% stablecoin APR on Euler or Morpho, or taking a Pendle PT. One of the only leveraged Pendle PTs I'm still in is PT USR, because it's just like I like taking those and leveraging and looping them. The organic yields for stablecoins as a result of all the points maximalism has been great, because you can just like say, you want to go speculate on points. Love it. I love that for you. Go ahead and do that. I'm going to take the counterparty. I'm going to take the PT, and now PTs are leverageable. I'm just going to take those PTs on Euler, take those PTs on Morpho, and loop and leverage them, and I'm going to get a real yield. You can get a speculative yield, and everyone's happy. I think rate swapping has become one of the coolest narratives that is like, that gets all these second order effects from this points bonanza and RWA create. Final thing I want to say in the RWAs is that I think there's another second order effect here, which is we're onboarding so many dollars. And I think when the froth starts, if it does start again, if the froth starts again and gets everyone super excited about like taking long exposure, now all of those dollars are already on chain. The friction or the hurdle needed to cross to get them to like go into more speculative assets is so much lower than taking someone from total TradFi, getting them on chain, getting them a wallet, doing all this other stuff. So I think RWAs have gotten a lot of like TradFi dollars on chain, and hopefully has made some of the friction smaller between like your stablecoin dollar maxi and going along on Bitcoin or something.
It's kind of like the way Coinbase offers. I don't know what the current rate is. Let's just say it's like essentially the
4 to 5%. It's
it's a lot. It's like it's high. I think they still make money on it because they're still like taking 10 bips on whatever it is.
Right.
But they are willing to take less because they want people to have money on exchanges. And it is so much easier when you get FOMO, when there's something interesting, when there's excitement, whatever it is that makes you want to buy, if you already have dollars on the exchange. And so it's like, well, why do I have this money in my bank account? Like I can be earning 4% or 5% or whatever it is on Coinbase. That's like the way that discussion starts. Yeah. And then you end up like spending it all or losing it all or making a lot of money. Maybe if you're a good trader or whatever, because you have the money on the exchange. And I do think that could be true with all these dollars that have been onboarded into these stablecoin assets. The point I wanted to make earlier when you were talking about like RWAs and like all these kind of failures is I think people try to tie a stablecoin to all these kind of like, improper assets. Like I think a stablecoin really should have very, very kind of clear, liquid, backing to it that can be, exited on a very kind of like quick basis. I think that like these kind of like credit swap things, I think like real estate, I think like futures on gold and oil don't really like make good collateral for a stablecoin. I think that they probably make something else. Like they should be, some sort of kind of other asset or primitive. And I think us as a space should kind of denote them that way. After the whole usual calamity that happened a few months ago, Pendle started differentiating RWAs and stablecoins. And I think that's really right. I think that's like a mature thing that we should all do, is that stablecoins have kind of like one set of unique properties, in the name itself is stable. And then there's these kind of like more experimental RWA things, coupons, like bonds, things that like, don't, have the same level of liquidity. They have kind of more of an expectation of upside, but also of volatility. And I think us as an industry should do better in kind of defining that differently, talking about them differently. And then people will not get caught in these traps of like USDO++, because it's not assumed to be 1-to-1. It's assumed that there will be some sort of discount or premium or whatever else is going on.
The amount of tuition that has to get paid, though, is still a lot. I mean, I've been paying some of it, right? So we're just gonna. People aren't gonna learn through good actors like educating. They will a little bit, but vicarious learning is way slower and way harder than experiential wisdom. And experiential wisdom comes from getting burnt, comes from playing with these things, hopefully in a risk-adjusted way. A small portion of your portfolio in a new or novel asset. Feeling, oh, this wasn't a stablecoin after all. It's down 20% because I'm an idiot, right? That kind of stuff is a great teacher and forces you to learn. One thing I will say, and hats off to Pendle, is that they have done this it's really amazing. They add these little eye buttons where you can just see what the heck you're investing in. So they tell you what it is. Also, and this is big to me, they tell you if there's instant withdrawals available. This is so big, and I can't believe Pendle added it, because it's such an important thing that no one really thinks to think about. So like they'll give you a little write up of what Asterisk is, how this thing works, and then like if it's redeemable or not. That's been amazing. But like someone going into USD Midas, they'll say, oh, okay, this is $1. This is like but it's not. It's effectively an on-chain curator managed vault that like runs a bunch of these underlying strategies, and it's done by Edge Capital. That's so different from like a paper wrapped USDT or USDC or anything of that nature. It's also kind of different than a basis trade, which you will never let me call a stablecoin. You always call it a vault. To your credit, it's true. And so, but there's just so many. There's CDPs, which I think are like a true stablecoin. It's just minted against debt. There's things minted against paper, which we tend to call stablecoins, like the most traditional type, USDC, USDT. And then you have 1,000 other types. How do you keep up with all of them?
Well, that's the problem. You can't. And I think we do need like simplification, and maybe that comes in the form of vaults and kind of like trusted actors, trusted curators. Like maybe that is part of the solution, because it's fine for you to say people need to pay their tuition. And for the nerds, for the degens, for the people who have the financial ability to go out there and experiment and try stuff out, that's fine. I paid my tuition. I still am paying tuition every day. Every time I try something new out, it's super easy to lose stuff in this space. But we need different kind of products. And maybe this is something that Tao can do, and like other curators can do, is like do that homework for other people, kind of like do a risk assessment. It's a scary thing doing a risk assessment for other people, because like that's putting a lot of weight on your shoulders.
Such a weird nascent space. We're seeing so many curators, so many vault products, so many like Edge Capital, MEV, RE7, Gauntlet. Like we're seeing emergent winners, I will say. People are like, oh, those guys have a good track record. I like those guys. I trust those guys. They've managed hundreds of millions of dollars. And now they have that Lindy. And now we have like these giants in this space that people are willing to outsource that expertise to. I think we're going to see a lot more of that.
I think we're going to see disasters too. Just before you jump in there, Vlad, I think we're also going to see some disasters. Like this is the way the space works. We have some sort of like part of it that gets built up. It gets really hyped. It gets too much money. It gets too much leverage. We're seeing a lot of those kind of things. And then something breaks, right? And so I have no opinion on whether it's going to be a Gauntlet or an Edge or a MEV or an RE7 or whoever. I think they're all great. I think they're all trying really hard. Inevitably, one of them is going to run into a major problem. We kind of started to see some stuff with like the like usual pieces. Like that was one pressure point. I think there will be bigger pressure points, and it's going to be super interesting to see how these curators deal with the like proper stress test. Asset depegged, money's lost. There are people angry in the Discord, Twitter, whatever trenches saying, give me my money back. How that situation gets resolved, I think, is going to be super interesting, because we really need it. This, space is far too complex for someone who does anything but DeFi full time to be able to kind of like properly and safely interact with it. So we need these trusted agents. We need the Taos, we need the Gauntlets, we need the RE7s, whoever, to take some of that burden away to do that risk mitigation. But if they don't do a good job, I think that the penalties for them, like the reputational losses, can be really extreme. So anyway, I'll pass it over to you, Vlad. Sorry, me and Steven have been waxing on that for too long.
One point I did want to add to you that I think is overall very bullish for crypto in general. In 2021, when we had the Celsiuses and the Three Arrows and the Vanguards, the direction then was kind of similar to now, whereas you had these major institutions, big Wall Street people coming to teach us how to actually manage money. And in the end, it was just trust me, bro technology. The space was highly centralized, black box for all of them, and it's rightfully so collapsed. The difference now is that curators, everything we do is on chain, and risk is a lot more fragmented, a lot more isolated. I am also curious what would happen in case, the market dumps a lot, or if we have some other major black swan event. I don't know, Tether being just,
Tether's anti-fragile.
Going away, or something to that large extent. It will affect curators a lot. It will affect like the space. But as a curator, usually, and this is kind of the signal that I got, total DeFi TVL is around 120 billion, I think now. Managing as a single entity anything more than 600-700 million is kind of starts to not be efficient anymore in the space, and you have to look outside of crypto. That is kind of the sweet spot, and that is also my guess as to why generally the TVL of Gauntlet Ed and RE7 kind of tends to stop there. They're just waiting for the market to grow a lot more. I know the people working there are extremely smart. I like to think that about our guys as well, but there are so many things that you cannot ever, you cannot prepare for every calamity. And based on what you were saying with, at one point the space is so complex and it's becoming even more and more modular and composable that at one point, if you want to have exposure to like good yields, you have to outsource research, outsource risk management, especially for Pendle. We launched this a couple of weeks ago. To my surprise, we're the first ones in the space to do this. The first ever bond of PT assets. We also launched it on IPOR. The very simple description of it is that we talked internally and said that, okay, we're very bullish on Pendle. We like PT assets. We like fixed returns. Let's look for, there has to be a way that we can combine PT assets to have yield that is maybe like as much as we can above treasury rate. Currently, it stays at around 2x treasuries. We simply, with every deposit, what actual risk management and research we do is we play around with the percentage allocation of each asset. So 10% of this vault is deposited in the USDC optimizer, which is ran by IPOR. It's simply a USDC lend position. And the remaining 90% of the capital is deposited in a variety of PT assets that we selected. And we are always playing around with how much capital should we put in each asset based on its liquidity and based on its APY. We care more about the yield being consistent than we care about it being high. We could probably play around with this, and we did in our models, to have the APY be 11-12%, but it will only stay there for like a day or two or maybe a week.
How do you guys allow for withdrawals here, though?
Withdrawals are scheduled. It takes up to 24 hours to do a withdrawal. We have the liquidity buffer for 10% that allows for like smaller deposits. This is made for whenever the vault will scale to, half size. But any deposit will happens within 12 hours. It is based on how the alpha, as I call it, the automation does the actual withdrawal of PT assets in each of the individual assets.
So I was also a buffer of liquid tables.
That's what I was going to say. I was talking to Roger because I had the same question, which is one of Vlad's coworkers at Tao Labs. Because I was like, this sounds kind of scary. Like, how does it work if I want to exit and like the PTs have gone down in value or something like that? And so there's this like 10% allocated to the IPOR USDC optimizer vault, which earns 5 or 6%, which kind of gives that buffer. Yeah. It makes it a little bit less capital efficient, but it makes it a little bit more liquid. So it's kind of like this different, it's like a almost completely PT asset, but it has a slightly different property in that it is more liquid than a traditional just like PT in itself. So you can actually get out. And then there is also a withdrawal fee of 0.08%, which just can like basically goes back to the rest of the vault, I think, and is there to help kind of compensate if there is some sort of actualized loss that happens. That portion is hopefully used to kind of like repay others that remain in the vault.
No, it really is. It's automated. It does so automatically. We had the same fear initially, Stephen, and we're like, oh, it's a great idea to have a basket of PT assets, but withdrawals, can they be instant? Initially, we modeled the vault to be 20% liquidity buffer, so it was a lot more aggressive than this. But at that point, it was already like the yield was not really worth it. Right. We are currently working at two things with this vault. First of all, we have to stay on top of it every time to decide whenever asset matures if we roll over into its next date or if we simply go into a different asset. We can only automate deposits up to a point because we have to carefully curate, hence the name, each one of these assets. We cannot automate it fully also because of reasons like, for example, imagine we add one PT asset which is into liquid, and we have a massive deposit in our own vault, which would then go disproportionately too much to one PT asset which might not have a deep enough liquidity. That would affect the yield, and that would go against our main thesis for it, which is to keep the yield consistent here. And also, we are definitely working on a V2 for it in the future. We are thinking of either adding PT loops into this vault or making a separate vault that feeds from this one, but also offers high yield through loops. But we're still playing around with how to manage risk there, how we would manage withdrawals there. This is very much still in the inception phase of us playing around with what it would look like. But we're definitely bullish on anything that is DeFi composability, any money Legos, and any sort of projects, any sort of product similar to this. More to come on the Pendle bond side.
Speaking of fancy stablecoins, there's been an argument going on like from some of the OGs, which is DeFi is becoming less and less DeFi and more on-chain TradFi, on-chain permissionless TradFi, which true. It's totally true, right? We have now 1,000 different institutions that are on-chain that are like issuing things. Like we just mentioned a bunch of hedge funds, literally hedge funds that are now on-chain that are issuing effectively receipt tokens against their on-chain funds. And the cool thing is it's permissionless. That's really cool. It's definitely not trustless because you have to trust the curator, you have to trust the manager, you have to trust the off-chain entity. And we've seen one protocol who I like a lot do like a return to monkey a little bit, which is Liquidity. So if you guys know Boyan, who's like I think he's either the founder or co-founder of Liquidity, he will rag on anything that is not decentralized. And he's always like, is there any DeFi anymore? Like he's very Boyan a lot. But Liquidity V2 just relaunched, and I'm wondering, like, will we ever see a return to the decentralized ethos? Or is it like, now we're just going to have two coexisting things? And DeFi will exist. It'll be a tiny portion of what we call DeFi. And then I don't even know what to call the other thing. It's like on-chain finance. It's not even decentralized, but it's on-chain finance that anyone can access is going to be this secondary thing that most people are playing with. And they just don't know the difference. They won't know when they're in DeFi and they won't know when they're in on-chain finance because the two look exactly the same.
I think that, so first of all, I have a lot of respect for Liquidity. I think what they're building is super cool. I think we need more actually decentralized protocols that are like doing this in the right way. It is really hard to do. Like, yeah. I mean, Liquidity themselves know this, right? Like what they are releasing is immutable code. When there is an issue, it has to be completely unwound and they have to relaunch it. And so that's what happened, right? They launched V2. There was an issue. I don't think anyone lost money, but it was a big enough of an issue that they had to pull everything back, rework it, re-audit it, and relaunch it. And like, that is a painful and timely and expensive task to do. You know, God bless them for doing it. Like they are doing it right. And like, I think that that's fantastic. I do think that like we have seen a lot of Dinos, which is decentralized and name only projects for a very long time. And those have flown under the guise of being actually DeFi. So I think there's like this very small quadrant, which is like the Liquidities doing it with the right ethos, with the kind of like, you know, truly decentralized way where you just release code out there, you let people use it. It is actually decentralized in that you can't go and change it or have like some just actor step in and do something. So that's one version of it. Then you have like the Dino section, which is like people pretending to be decentralized, but they're not. And the reason that they're not is because the team holds all the tokens or the investors or a few whales or whatever it is. And they can kind of just like spin up whatever they like, you know, make changes. And even if like governance says something like the smart contracts, the developers don't necessarily have to follow it. There's a lot of reasons why, you know, things are dinos. And then you have this like new category, which is not even pretending to be decentralized. So right. I think we'll have a spectrum of stuff. I think that like the same way that we have, you know, L2s, like for example, like the base sequencer is just literally like a multi-sig. People love it because it offers one set of kind of values. And I think, you know, assuming that everyone kind of like fits into the ethos of like wanting that kind of slightly maybe less frills, slightly less good user experience, but truly decentralized thing, there will be a market for that. But that market is not 100% of DeFi. That's not 100% of users. And so I think as there's more adoption, as there's more people coming onboarding, people have different interests, things that they're looking for, and it kind of just naturally makes sense that we transition this way. I hope that like the Bojans of the world continue to fight the good fight, and we have truly decentralized dollars that are not, you know, like, you know, frozen at any time, that can like, you know, be kind of this truly decentralized like superpower that I think we all kind of like got into the space believing. But I think if we're going to see the real adoption, we need the curators managing the risk. We need the protocols being able to freeze stuff when there's a hack, because, you know, our wives and our girlfriends and our relatives who are not like crypto native people just won't accept, oh, exploit happened, now my funds are gone. Like they just can't understand that. There's no reason they should as well. So I think it's going to be a spectrum of different products. I think probably the dinos start falling away and we see less and less of them because there's less of this incentive to pretend to be decentralized. And we just see these on-chain finance projects, which I think is a great term for them, Stephen. And then hopefully we see, you know, the white knights out there, the Bojans of the world, still fighting the good fight with decentralization, because we do need that as well, even if the TAM for it maybe is relatively smaller.
The reality is that there just isn't that many of us who care about decentralization a lot, or at least a bit. Most people care about convenience, and as long as they can use a piece of software conveniently, they just sign wherever you show them. It's kind of bittersweet that DeFi is growing, and if we want it to grow, like realistically, you have to onboard the TradFi institutions. You have to onboard banks and funds, and they have a certain way of doing things. We're talking to a bunch of traditional funds and institutions, and they are very open to the idea. They like DeFi, they like the composability. They could not care less about the decentralization aspect. They kind of see it as a bad thing even.
Yeah.
How is it regulated? How is it safe? How can you get funds back? So if we want decentralization, and if we want pure decentralization, then crypto will just stay kind of where it's at now, maybe smaller, and it'll just be Mara, Steven, Vlad, and a couple of other people just, trading each other. But if we want it to become mainstream, we have to integrate with the rest of the financial system. Revolut, for example, I think it's the biggest neobank in the world. They are currently working on having integrated crypto wallet in your account, but it's an actual permissionless wallet. And the user will not care. The user will not see the difference in the interface. Yeah. Whether they have USD, you just have BTC under it. But the backend, which is what blockchain technology is, it's backend tech, will just allow for permissionless assets to be seamlessly traded. Same for Pay, the card. You have USDC on it. The actual swap to USD when you pay is done on the payment gateway in the backend well after you took your Starbucks. So,
oh man, it's too bad you don't have Patrick on here. He's such a no-sys maxi.
We're going to see even, I think, a further step of this, which is going to be full like AML, KYC compliant DeFi. I think like we're just on the cusp of having that happen. And like, you're giving me a look, Steve, and I think that that's part of the reason why we're going to have V4. You're going to have pools where there's only whitelisted addresses that can be swapping between one another. And so if you want to participate in that, you have to KYC, and then you have to then they can prove that there is no money laundering that's going on through the swapping. It's all something. Yeah. And so we're going to see that there's going to be blockchains that are like that. Athena's building something like that. Many people are building stuff like that. So maybe that we have the true DeFi. Then maybe we have still some dinos out there. Then we just have finance on chain. And then we have the proper TradFi. We literally are just recreating TradFi on crypto rails. I think maybe those will be the 4 quadrants of it. Hopefully, my hope in all this is that it just leads to a democratization of finance. I think that would be a huge win, even for me. Even if the true decentralized pieces of it don't end up being as popular as we all hope and dream, if it democratizes it and we have less centralization of Visa and MasterCard taking huge fees and people not being able to move their money when they want it, and there's still a lot of power in kind of opening these gates, letting everyone transact when they want with whoever they want, and hopefully that kind of sticks around. So we'll see.
I want to tap on this for a second because we're already seeing this. I can't find any examples here right now, but on Merkle, there are a bunch of permissioned, I don't even know what you call these. They're not really pools, but there are a bunch of permissioned opportunities where there'll be a little lock next to it, which says this is only accessible if you've done the specific things to get in. And so we're already seeing hurdles put in front of people to access specific yields. And I think some of them maybe have KYC. Some of them are you have to be a member of this or that thing. And so we're seeing it. And, part of me mourns this, but the TAM, since you mentioned this wonderful phrase earlier, the total addressable market is always going to be larger if you're tapping into both the TradFi folk and the DeFi folk. So what I'm calling on-chain finance, which is just anyone on-chain can access these, and yes, maybe they're not trustless. Yes, maybe they're not purely decentralized. Yes, maybe there are a bunch of other entities, but anyone can access them, either by themselves or with some sort of VPN. That's always going to be a bigger market than having to KYC to access the yield, or trying to be a decentralization maxi and only using immutable smart contracts that are launched in perpetuity, which is really small, but totally philosophically aligned with DeFi. And so I'm still hopeful. I think that rather than the permission thing, we will hopefully see either people just be willing to do the regulatory arbitrage and say, I'm willing to have everything open for people who are, of the right nations and no KYC, because that's the biggest market, rather than push the other way. I hope. And I hope regulation follows those trailblazers. I know we're a little over time. I do want to poke at a few of the yields that we're seeing out in the world. Oilers I saw this yesterday, and so I was like, what the heck is going on? Sonic should be doing their airdrop like in a month. So very, very soon. And so I was like, okay, well, what's going on with Sonic? And I was looking at these things. They have, do you know what, let's go to borrow. Do you know what USDX is? Is this one of like those crazy stablecoins? It's not really a stablecoin.
I do not know.
Okay, we got to look into it because $4 million to borrow at a 74% AP. Well, they use ROE, which I always forget if it's an APY or APR.
No. I do know what this is. We met with this team recently, and I'm forgetting. They have all of their assets start with X in the front, and they're on Sonic. I'm forgetting which one it is. Yeah. I've met with this team last week, and I don't remember what their name is.
Okay, we'll figure that out because this team, I mean, this is pretty good. I'm selfishly thinking about this because we're running a yield competition for stablecoins right now, and you know the prizes are pretty nice. And so I'm like, what should I jump into this? I'm also competing, and then like here's YieldFi and here's all of these being decent has made me think maybe I should go farm those last minute points on Sonic. So that still exists. Avalanche rewards are still good. There's other thing we haven't even talked about, which is like look at that. Oh yeah, there is build. There it is on Avalanche. I didn't even know they launched on Avalanche. But look at 260. Oh my gosh, 261%. This is probably all in. This is in AVAX rewards, but isn't S build is you can purchase it. You don't have to be KYC to get this.
I'm not 100% sure how exactly it works. It is very cool to see a BlackRock asset on chain in a money market being used. I know that Euler is the first protocol that has an integration with a BlackRock asset. So like pretty historic in that sense. How you actually acquire S build, I'm not sure.
Yeah, I think it's purchasable. Well, I'll check after this, but so that's been cool. I mean, there's so many other things that we didn't even get to talk about, like the drama on Fluid, which is like, is the ETH USDC just an impermanent loss machine? I think we've always said, kinda, it is a little bit, but people, what I like is that if you want to enter into an impermanent loss machine, you can. No one's stopping you. There's no regulation saying, you know what, impermanent loss machines can be bad. We're going to prevent people from going in. No, go do what you want. That's DeFi. It's the Wild West on purpose. And we love Fluid, by the way. I think most of their products are amazing, especially like the like pairs for the smart collateral. That was genius. Shout out to the Fluid team. Nothing but a fan of them. But CLPs that you're leveraging is almost, I've never seen it be a good idea. And we have played with these things since the days of, I don't know if you guys remember, Tulip and Francium. Yeah, shout out. You were there. You were in those trenches. Alpha Homora. Like, we've seen so many teams try this, and it's never been profitable for after a big swing. So like in either direction.
Homora was the closest to get it right, but then they had the whole Iron Bank.
They were exposed to Iron Bank, which is a shame. I like the Alpha Homora team, and they rebranded like 10 times. They're still out there, but I don't even know who they are anymore. They're like Blackwater. You guys know Blackwater? It's a private military group out of my hometown in Mohawk, North Carolina. And they did horrible things. And every time they did horrible things and like war crimes, they just rebranded. So they were like Blackwater, then they were Academy, then they were Z, and now they're probably something different because every time they get a bad name, they're like, we just need to change our name and then no one will know who we are. I'm not saying Alpha Homora has done horrible things, but like they rebranded a lot. And I think they were something different before Alpha Homora.
You basically said that Alpha Homora did war crimes in Zambia, Stephen. Come on.
That's exactly what I'm saying. Yeah, they're responsible for war crimes in Zambia. Please don't quote me on that. It's going to be like the one snippet and then they throw it in there. Yeah, there's so many cool things out there for the average yield farmer. Yields are up, which is cool. I like that. I just did a thread about ETH yields. I was surprised to find so many over 20% ETH yields out there. Very surprised. And even Bitcoin yields. Bitcoin yields, I will say, are a little bit more compressed, harder to find. But hey, I'm enjoying the markets right now. Bitcoin is at 104K, which I was like, oh no, we're dumping, but not really. I mean, we're up to 104K. That's like hugely good, even though we hit like 107. So
Bitcoin yield is also the hottest thing demanded by TradFi, by smaller funds. Tier 2 and Tier 3 liquid funds, literally everyone we talk to, they aim for Bitcoin yield. That's the hottest thing that they want. Because stablecoins, you have a lot of opportunities there, but Bitcoin people are really trying to, especially past 5%, if you can find a way to offer above 5% yield on Bitcoin, especially if it's really...
Then you have a TVL sponge.
Exactly.
Speaking of, okay, so last, I won't call it a shill, but we work with the IORP team. We love the IORP team. And as a result, I did want to just like mention that they're doing a campaign right now So like on it's a card, right? So we're talking about cards. The reason why I like the card is because you can get yield, and I'm using this, you can get yield on your collateral, which is the same thing as getting yield on a checking account. So you can get right now, it's like 20% because it's 11% on the Liquid USD. So Liquid USD is like a Veda 7Cs managed stablecoin. It's another one of these fun things. It's another one of these vaults that's like managed by some curator. 11.5% APY on that. That's the organic rate. Plus they're like doing a 6.5% additional incentives on the deposits into your cash account in ETHFi. So it's like 18 point whatever percent plus 5% cash back. So I'm doing some home renovations. If I'm going to do a big purchase and I can get 5% cash back plus 18% APY on my collateral, this makes a lot more sense than a traditional checking account for me. And it feels more on-chain. So I do like that. And they also have Liquid BTC, Liquid ETH. Liquid BTC is at like 3%. So it's not crazy, but hey, if you want to never lose your Bitcoin and you just want to like have it as spendable against it, this is what the rich people do, right? They just take loans against their money. They never pay taxes. And then there's like Liquid ETH, which has 7% APY, plus you can spend against it. There's no like cost to spend against it now. So that's cool. There's so much happening in DeFi. Never a boring day. Vlad, I'll let you get the last word. You look like you want to say something.
As you said earlier, make sure to work out at least 3-4 times a week. Staying in a chair is we all stay.
Mara, what's the name of that chair that you got, that company that's really good?
I have like a Herman Miller chair.
Herman Miller. Yeah.
Yeah.
That one's blown up.
Real good. Real comfy. It's expensive. Worth the money if you spend a long time sitting in front of the computer.
This chair, which looks fancy, is the worst. I need to get a new chair, and I will probably do that like in the very immediate future.
I said this just even about a year ago, and he scoffed at me
like,
and said, I would never buy a chair that wasn't from Goodwill or something like that. So
I don't know if I said that. I said I got this from Goodwill. I don't know if I said I'd never buy a chair.
Fair enough.
But I do have this beautiful like oak desk that is it was like $15 from like Goodwill. It's amazing. And it came with this chair, and the chair is killing me. I swear I'm going to die a slow death if I keep using this. So probably will invest in a nice chair soon.
$5,000 gaming chair, Steven. That's what we need.
The Herman
$5,000.
$5,000. Herman Miller is like the top tier, and that's not even that expensive. There's like check out Herman Miller if you want a nice chair.
No ref links, not sponsored.
No sponsored by Herman Miller. Last thing, a little bit of alpha for you guys. I recently learned how to make my own cold brew. It's so crazy easy, and I say that because I am a person who's always rushing to get coffee between meetings. So cold brew, you just add the concentrate. And me, I add the milk. I'm a latte kind of guy, but you just add that, you throw ice cubes in it, and you're good. It's amazing. All you have to do is a 1-to-4 ratio of ground coffee beans to water, throw it in the fridge 24 hours, strain it. You got concentrate cold brew. So I've been over the moon about this realization.
Steven's been going through a renaissance right now. He's doing renovations. He's making cold brew. He's getting a new chair.
Start on renovations.
He's a new man over here.
Yeah, my wife's happy, so that's huge. Yeah. Highly recommend that if you guys can get into that phase of your life. So, all right, thank you, Vlad, for joining us. Go check out Tao. Go check out iPour. I look for Tao Labs actually in all of your creating spots. I think they're gonna start being places, and you're gonna start seeing them. So
we are starting to be really everywhere. So yeah, keep an eye out for us. Thank you for having me, Steven. Thank you for having me, Mara.
Thank you for and everyone else have a wonderful rest of your. Oh wait, quick! Should Ripple buy USDC or should Coinbase buy it?
Ripple, send it to zero.
Ripple has more money. And they don't know what to do with it. I think it's going to be them.
Which one's more bullish for USDC? I want to see my coin. I want to see my dollars go to $1.05.
I think Coinbase.
Yeah, obviously. And they already kind of own it. So thank you guys for watching, and have a wonderful rest of your day.